And welcome back. About 1 week ago, I posted a video about some very early signs that our housing market has potentially bottomed out. In that video, I shared how new home sales in the US actually increased 2.3% on a month-to-month basis in December. Again, a 2.3% increase in brand new home sales from November through December last year. And of course, that's based on signed contracts between buyers and builders. I also stated that based on data from the National Association of Realtors regarding signed contracts between buyers and sellers for existing houses, that increased 2.5% on a month-to-month basis in December. On top of that, I shared how applications for home loans in order to buy houses were increasing for the previous 2 consecutive weeks based on data from the Mortgage Bankers Association or the MBA. However, in today's video, I'm actually gonna be sharing some reports with you guys because that may have changed. So look at this. This is based on a brand new report that was just published on February 1st here, again from the MBA here. It says here mortgage applications decreased 9% from 1 week ago, and this is for the week ended January 27th this year. Again though, this is based on refis plus purchases. So let's break this down. Refis decreased 7% compared to last week, but was down a whopping 80% compared to the same week 1 year ago. Obviously, it makes sense. We're seeing a huge decrease of refis because rates have increased so much, right? But here's the juicy part here. The seasonally adjusted purchase index, which of course measures applications for home purchase applications or home purchase loans, decreased 10% from 1 week ago. So a decrease in the amount of people submitting applications for home loans to buy houses, down by 10% compared to last week. And keep in mind, the previous 2 weeks, we saw increases in this index here. And also compared to 1 year ago, their purchase index is down 41%. And also check this out because this is pretty eye-opening because they say here, according to Joel Kahn, who's the MBA's vice president and deputy chief economist, he says mortgage rates declined for the 4th consecutive week and now have fallen about 40 basis points over the past month. So despite the fact that mortgage rates have been more or less on a downward trend, really ever since the end of October here, applications for home loans decreased by 10% last week and was down a whopping 41% compared to 12 months ago. He says here overall application activity, which of course includes refis plus purchases, overall application activity declined last week despite lower rates. And speaking of rates, have a look at this. Here again is our purchase index ever since really September 2022. So we did see an increase for the week ended January 16th and a slight increase 2 weeks ago for the week ended January 23rd, but again, a decrease of 10% for the week ended January 30th here. So despite the fact that rates have been more or less on a downward trend ever since really the end of October here, we did see a 10% decrease in applications last week. So a 10% decrease compared to last week, despite the fact that rates went from about 6.5% to approximately 6.13% for the week ended January 23rd. Also in regards to rates right now, as of today, which is February 1st, can't believe it's February already, average rates according to investedpedia.com for people with exceptional credit is at 6.37%. And also according to the Mortgage News Daily, the average rate for a 30-year fix is at 6.16%. Again, for people with exceptional credit, of course. 15-year is at 5.23%. And FHA as well as VA loans is around 5.8%. So this decrease of applications down by 10% last week is pretty eye-opening because rates have been coming down. So I actually want to share an example with you guys because as you guys all know, on October 20th, rates really hit 12-month highs. That's around 7.4%. So let's assume someone's buying a house for $450,000 back in the end of October last year, when rates are averaging at 7.4%. Putting 5% down, buying a $450,000 home, your average monthly housing payment, which of course is just principal and interest in this example here, is approximately $3,000 per month, $2,959 to be exact. But fast forward to today, average rates at 6.16%, buying a $450,000 home at 5% down is approximately $2,600 $600 per month. Therefore, home buyers looking to buy a $450,000 home, putting 5% down, are going to save around $400 per month now compared to the end of October last year. But again, despite these savings that home buyers right now are benefiting from, applications for home loans actually decreased last week. And here's some other trends we also know as well, because home showings across North America as well as in the United States have been decreasing. If you actually go onto Showing Time, this is actually a website I share frequently on the channel here. They haven't provided 2023's numbers just yet, but we do know is that home showings in North America have been declining compared to the first week of 2022 ever since mid-July last year. So fewer home showings across North America compared to the first week of 2022. And because I'm a housing market data nerd, I emailed Showing Time about a week ago, and they share with me that they actually do plan to provide this year's numbers regarding home showings in North America. So they said ETA on that, but they haven't provided that just yet. But here's what we do know for December. This is actually a brand new report that I actually just found today here. This is based on a report from Showing Time. They have what's called their Showing Time Showing Index, which tracks the average number of buyers or buyer showings on active residential properties on a monthly basis. This actually includes all buyer showing appointments requested or logged across all Showing Time systems. So one thing I do want to mention regarding this report right here is that not every real estate agent uses Showing Time in order to show houses to their clients. So when I'm showing clients houses in the greater Sacramento area, I would say probably 8 times out of 10, I'm not using Showing Time. I just access a lockbox that has a Bluetooth capability. I open my app, I open the lockbox via Bluetooth. And I actually do not use Showing Time in order to show houses. Every market's different, of course, though, right? Every agent's different as well. But I just want to share that caveat because this report right here doesn't show every single real estate showing across the United States, of course. But it does show us kind of a little bit of a sneak peek into what's happening, though. So here's what they had to say regarding the whole United States as a whole. So home showings, which again is a measure of home showing activity per residential property, their index decreased 32.2% from December 2021 through December 2022, a decrease of 32.2%. And this is actually the 4th consecutive decrease on a year-over-year basis in home showings in the US. And also this decrease of 32% on a year-over-year basis is much different compared to the giant increase we saw in 2020, where home showings increased a whopping 63.4%, and they followed that in 2021 with an increase of 11.2% in 2021. These are based on December stats here. Giant increases over the past couple of years, but a giant decrease in 2022. Here's their Showing Time Index by month going back to January of 2014, which I found to be very interesting here. So when looking at this graphic right here, more or less every December each year, we reach a 12-month low regarding home showings. Obviously, it makes sense we have a decrease in home showings in the winter months, but especially around the holidays in December. So that was really the low each year through 2020. And this is more or less a mirror image each year. A giant decrease in December and then a big increase in the spring and summer months each and every year. But of course, when COVID happened and we had stay-at-home orders more or less in, what was that? April and March of 2020-ish, a giant decrease of home showings, which of course makes sense, but ever since then, a giant increase. We did see a trough here in December of 2020, but actually skyrocketed in 2021, and again skyrocketed again in 2022, before decreasing big time through the end of 2022, which is obviously much different compared to pre-COVID levels here. We saw a slight slough off every single year in the second half of the year. But again, in 2022, a giant decrease in home showings across North America. So that's what we're seeing nationwide. But I actually want to share by each of the 4 major regions as well. So in the Northeast, home showings decreased by 27%. And this, by the way, is the 4th consecutive decrease on a year-over-year basis in the Northeast. One thing I do want to mention though is that in the Northeast, declining by 27% compared to December 2021, this decrease of 27% is actually the smallest decrease amongst these 4 major regions here. So speaking of that, here's the South. The South, we had a decrease of 36.3% in home showings across the United States compared to a year ago. The Midwest declined by 29.1% and also falling for the 4th consecutive month, as you can see right here. Going from 12% in September, October 23%, then 26% decline in November, and that was followed by 29.1% decrease on a year-over-year basis in December. We also have the West as well, which actually had the biggest decrease on a year-over-year basis by far, decreasing by 57.2%, which is absolutely insane. And on top of that, this is, of course, the biggest decrease amongst these 4 major regions here, but also the 4th consecutive month of decreases in home showings in the West as well. And also compared to the nationwide average, again, decreasing by 32%, whereas the West falling by 57.2%. What's interesting about the West as well is that back in 2014 through 2019, the West, which is in orange, which you can see right here is in orange, is more or less on track with the national averages here. The peak was a little bit higher in 2015 and 2016-ish, but look at this giant peak we saw back in the first half of 2021, surpassing home showings nationwide during that time frame. But look at this fallout. Also in the US as a whole, we saw a decrease in home showings, but in the West, a bigger decrease compared to the nation's average. But overall, across the United States, home showings down 32% from 12 months ago. Also, according to the National Association of Realtors Central Lock Home Showings Report, they reported last month, or for December, that home showings nationwide were down 20% on a year-over-year basis. And home showings decreased 30% in the Northeast, down 33% in the Midwest, down 19% in the West, and down 12% in the South. By the way, this report right here is based on home showings in which real estate agents accessed Bluetooth-enabled lock boxes. And that's what they are calling right here. The Central Lock is a big provider of lockbox systems in the US. In the Sacramento area, I would say probably 90% of all houses for sale use a Central Lock lockbox system. That's the blue lockbox you guys see on houses for sale. An agent opens their app, I can't talk, and then types in their code, and they get the key, their house key, out of the lockbox. And the Central Lock records that as a home showing. Again, down 20% on a year-over-year basis, whereas showing time is reporting a decrease of 32.2%. Speaking of some more leading indications of our housing market here, people searching for homes for sale on Google have been more or less decreasing ever since August of 2022. This is based on home searches for homes for sale in the US over the past 12 months. As you can see here, the interest for the search term has been more or less decreasing ever since August of 2022. Also, the current levels we have right now for people searching for homes for sale is actually a decrease of 19% from 12 months ago. Now, having said that, we did see a slight increase for people searching for homes for sale just after the Christmas holiday, but ever since then, it has been more or less flat, except for the past couple of weeks, a very, very small increase. But when you compare the interest over time right now compared to the same time period 12 months ago, it's down approximately 19%. One thing I do want to add regarding this measure right here is that even though someone's searching for homes for sale, of course, it doesn't mean they're actually a home buyer or they're actually gonna be buying a house. So that's why I'm kind of sharing multiple sources here to kind of give you a big picture here. So I actually want to share what's happening right now because, again, applications decreased by 10% last week after increasing for 2 consecutive weeks. So here's what's happening right now regarding contracts being signed, right? We can talk about home showings, people searching for homes for sale, also applications as well. But it really doesn't tell us a whole lot unless we're talking about an increase or this activity is due to an increase of contracts being signed and, of course, more home sales as well. So as I report to you guys, on January 27th. I probably made a video on January 27th and posted on January 28th. But according to the National Association of Realtors, they reported for December on a month-to-month basis, pending home sales actually increased 2.5%. And that was the first monthly increase since May of last year. However, though, as I shared in my video with you guys, contracts being signed between buyers and sellers for existing houses decreased by 34% on a year-over-year basis in December. So a decrease from December 2021 through December 2022, a decrease of 34%. On top of that, based on my analysis of the National Association of Realtors data, excluding last November, as well as April 2020, the onset of pandemic here, December's pace of contracts being signed pending home sales was the lowest levels since June of 2010. Additionally, that 34% decrease on a year-over-year basis is actually the third biggest year-over-year decrease on record, going back to at least 2001, as far back as the National Association of Realtors data goes. So big picture here, even though contracts being signed increased by 2.5% on a month-to-month basis, compare that to previous years, we're still down big time. Therefore, based on the data we have today, this is not going to be a repeat of the craziness that we had over the past few years. Here's what we also know according to data from altosresearch.com. So when looking at asking prices nationwide, asking prices more or less peaked in June of last year, when asking prices averaged around $459,000. I should say the median asking price was $459,000. It decreased through the end of 2022. However, though, every single week this year, we have been seeing a slight increase of asking prices nationwide, going from approximately $405,000, now it's approximately $415,000. I will say it's entirely normal to see asking prices increase, but for those who are saying that our housing market's crashing, the data doesn't really support that. An increase of asking prices right now, we're also seeing this due to the fact that inventory has been decreasing ever since more or less November last year. Inventory is still higher compared to the past few years, but has been decreasing more or less ever since November last year. And this is actually causing the number of price reductions actually to decrease. Look at this. The share of price drops right now is at 34% and has been decreasing ever since mid-November. The share right now at approximately 34% of price drops right now is more or less on par with the end of July last year. So the lowest levels for price drops ever since the end of July last year, likely due to a decrease of inventory in the US. Here's something else I also noticed as well today, which I have not shared on the channel just yet. These are the properties with price increases. These are based on iBuyers and flippers who are buying houses and flipping them for obviously for a higher amount, unless you're Zillow, of course, right? Anyways, these are properties with price increases. Obviously, these numbers here are a very low amount, but this increase is something worth noting here. So the share of properties with a price increase, again, these are more or less flippers, the share is about 2.42%. This means approximately 2.4% of all houses for sale right now have increased their asking prices on their houses based on flipping houses. So at 2.4%, a slight increase compared to the past couple weeks here, but we reached a bottom, which was more or less right here in mid-November, when the share was 1.5%. Now, again, it's approximately 2.5%, almost 2.5%. Again, a very small increase here, but something definitely worth noting here because it appears that investor activity is increasing very, very slightly. And having said that, if you guys are looking for a real estate agent referral, whether you're looking to buy or sell a house in virtually any parts of the whole United States, then check out that link below, which is homeandmoney.com. Hope you guys have an awesome day. I appreciate you, and I'll see you on the next video.